Hey everybody, it's Greg Gossett from Gossett Trading and Mentoring Live. Today is Tuesday, August 6, 2019, and we are again in the final hour of the market. As many of you know, I believe that the closing prices of the day are the most valid prices of the day. Those at the close of the market, the large institutional financial institutions and the market makers take over control from the algorithms and therefore move it in what my opinion is the most valid price of the day. And so those are the prices that I make my buying and selling decisions from. So we are having an up day after yesterday's massacre. Boy, that was brutal yesterday. Unbelievably brutal. So we're up, what are we up here? We're up about 249 on the Dow, 100 on the NASDAQ, and 30 on the S&P. We had a huge reversal, yesterday after the market close. I think we were down 700 points. And then in the futures after the market close, I think we went down close to another 600 points after the market closed. And then we were able to rally and actually go green. So unbelievable. It was looking like Armageddon yesterday, but glad to be in the green today. It's been a nice green day. And I think made close to about half back what I lost yesterday, which I'm ecstatic about. When you have a big loss, there's a tendency for people to go ahead and try to just hurry and make it back, and it's just a recipe for disaster. If you have a bad day and you can make half back the next day, you're well on your way to making that back over time. And that's how I look at it. Whenever I have a big loss, I just think to myself, all right, I'm going to make this back over time. I'm not going to rush it. I'm going to just take my signals. And if it takes me a month to make it back, so be it. So, all right, let me make sure everybody can hear me. John, hey, John. John says, nice call on MA. No guts for me. Yeah, it was a good trade for sure. It was scary, John. Yesterday was a scary ass day, but when you get a valid signal, even if it is scary, you got to go ahead and take it. Murat, hey, good to see you. Thank you for coming by, Murat. So as you guys can probably hear from my voice, I'm pretty sick. Man, last night was brutal. I had the chills. I had the chills all night long. Oh man, I got the 1-2 punch yesterday with the market and being sick. So I'm going to try to make it through today. Hopefully I'll survive. Johnny, hey buddy, how you doing? He says, hi folks, it was a rough Monday. Oh man. Yeah, that's an understatement. It was a rough Monday. So, all right. Well, listen, thanks everybody for coming by and spending your time and investing your time with me. I appreciate it. The format for today, as usual, is we're going to go through, first of all, we're going to run the legal disclaimer. Then we're going to come back. We're going to go through all my current positions. We're going to talk about when I bought them, why I bought them, and how am I going to manage them going forward. After that, we're going to do just a few minutes on some trader psychology. As you know, trader psychology to me is the difference between a consistently winning trader and a consistently losing trader. There's really no skill in being able to hit the buy and sell button, but there is skill in actually hitting the button when you're supposed to and not hitting it when you're not supposed to. So it really does come back to psychology at all times. Then after that, we're going to go through all the stocks on my watch list. We're going to take a look at all the technicals. We're going to see if we can get a combination of signals, either moving averages or MACD or RSI, ATR channels. And if we find something good at the end of the day, then we'll go ahead and we'll take that position. So anyway, that is the plan for today, everybody. So, and then after the market closes, if you have any questions about what I discussed here today, please let me know, and I'll do my best to clarify. Or if you want me to look at a particular stock, anything like that, I'm happy to do that as well. So, all right. So that being said, let's run that legal disclaimer, and I'll be right back. Thanks.
This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and/or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much.
Okay. Max says market scene was sick last night. I'll tell you what, Max, it was super sick. I mean, after that horrible day we had, and then to have the futures down, I can't remember exactly what it was, 600, 650, 680 on top of what we just had. I mean, it was freaking Armageddon. Unbelievable. I was so glad that I didn't buy some of the things I was looking to buy. But anyway, you know, it's days like yesterday, everybody, that they don't come around a lot, but as you can see, they're possible. And so always err on the side of a small position size and a combination of positions. You know, don't ever just load the boat up because you feel like it, or, you know, I mean, your job as a trader, first and foremost, is to manage risk. And how do you manage risk? By taking appropriate position sizes and by your allocation of stocks. You know, if you were loaded up to the gills yesterday, I mean, just think about if the market didn't turn around, where you would be sitting. I mean, it might take you 3 or 4, 5 months to make back what you lost. So, you know, me personally, I like to make, you know, a small, steady amount all the time, because it keeps me from becoming destabilized. Because when you become destabilized, when you have huge wins or you have huge losses, that's when traders in general make bad decisions with how much they're buying. So anyway, you know, let's try to learn from yesterday and position size correctly. You know, let's do this for the long run. Let's have our capital last for the long run and make it slow and steady. Murat says, Greg, what is the color code of your bars? On my charting program, blue only appears when there's no price change, but you seem to have blue all the time. Are you talking about over here, Murat? Because it shows the change. That's in green. If it were down, it would be red. But I think the actual price itself here, maybe you see it as blue. I see it as black. Or maybe you're looking at the bars themselves, these being green and blue and red. That's something totally different. That's something totally different. That's something called the impulse system that I learned from Dr. Alexander Elder, from studying with Dr. Alexander Elder. It's not a big part of how I trade. I'll get into it at one point, but yeah. Hey, way to go, Max. Pretty sure it's Elder's impulse coloring. That's exactly right. Good call. That's exactly what it is. Let's get through this, and I'll explain that another time when we have more time and I have more energy, because it's not super relative to what we're doing right this second. So we got a lot to get through, but I will get through that at another time. All right. All right, so we did buy MasterCard yesterday on the 5th of August. We bought it because it rejected the 100-day moving average, and it also closed back above the 30 RSI. So there's two confirmations there. One, it didn't like the 100-day moving average, and it went under 30 RSI and closed back over 30 RSI. You can see we've had a nice day today. It's up 2.78%. I did hit 3 profit targets already today. So My ultimate profit target is here at the pink line. This is 272.10. This is the 50 RSI. However, below this is the 50-day moving average. So, this is going to be a crucial area, whether or not we can get above that. If we go above this, then I will keep the position. If we go above and hold it, then I'll keep the position and continue up to here. However, like say today we tested the 50 and then closed below it, that would be my signal to exit. So if it tests the 50, closes above, I'll keep it and shoot for here. If it tests the 50 and then rejects it, close underneath it, I will go ahead and get out. If tomorrow we close below the previous day's low, that will also be my signal to get out. So the 50 is my signal to get out. If we test it and fail, that's my signal to get out on the upside. If tomorrow or in the coming days we close below the previous day's low, that will also be my signal. But this has been a really nice trade so far. Grateful to have this one. So that's MasterCard. So, if we get a rally into the end of the day, I'm going to have to take a look and see about this 50. All right, so we've had Merck here for 4 days. I did buy it back here on the 31st of July. We had earnings, it moved up, it came back down. It did hold the previous highs here. It did hold these were resistance. We broke through it. Now these act as support. It came down. MACD on that day went positive. We held the 50 RSI. My stop yesterday would have been a close below the 50-day, the upward sloping 50-day moving average. But you can see it did test it intraday, and then it closed back above it. So that's why I kept it. I did hit one profit target today. Got close to a second, but not quite there. So moving forward, how am I going to manage this trade? Well, if it continues to move up, I'm going to continue to scale. However, at this point, I'm probably going to tighten up this stop here, probably to either the 5 or the 10-day moving forward. So tomorrow, if we closed under the 5-day, I would probably get out, or under the 10. It would just depend about the price action of how it happens. So this has been a good trade. We phased out here, we phased out here, and we phased out here. Merck has been really strong compared to the rest of the market, obviously. So this is a good trade. We'll just be patient with it, and we'll see what happens going forward. All right, SPY. So, as most of you know, I do buy the SPY at the end of the day each day, and I sell it first thing at the open the next morning. So I did buy it yesterday at 283.82, and I did sell it today right at the open at 285.93. And in case we have some new viewers, you might be wondering, why would you do that? It doesn't seem very precise, and you're right. This is from Liz Ann Saunders at Bespoke Invest. But you have two options here. You could either buy the SPY at the open in the morning, and then you could sell it at the close of that same day. So you could buy at the open, sell at the close. If you would have done that since 1993, you would have returned a negative 13.9%. But if you do the opposite of like what I do, I buy the SPY at the close each day, and I sell it first thing the next morning. If you opt for this option, instead of the first one, since 1993, you would have returned 634.2%. So buying at the open, selling at the close, you would return a negative 13.9. Doing the opposite, buying at the close, selling at the next open the next morning, 634.2%. So it does have an edge. You can see since 1993, it's had a really good edge. So I prefer to buy at the close, sell in the morning. I take this trade every single day. I use a 10% position size. It does have drawdowns, just like any other good trading approach. It's just part of the game. So, you want to position size correctly so that you can stay in and let that edge play out. I was going through my numbers. I started doing this this year, February 26th. And I just did a rough look at the numbers of how far the S&P is up since February 26th and how much I'm up using this approach. And using this approach compared to buying and holding the S&P, almost double the return of just holding it and having to go through all those big drawdowns holding it. So yeah, I mean, when I did the numbers, I was like, wow, yeah, this is really working well. So yeah, almost double the return of just buying and holding, using the buy in the afternoon, sell in the morning. All right, so yeah, so that was a nice profit overnight. Of course, yesterday we had a real big loss from here to here. But that's how it goes, right? So I will be buying this again at the end of the day, and then selling it first thing tomorrow morning. So that's all we have. We have MasterCard. We bought after it bounced off the 100 and went from under the 30 back over the 30. We've hit 3 profit targets today. Merck, we have hit 1 profit target today, and then we'll buy the SPY at the end of the day. All right. So listen, before we go through the watch list and go through all the stocks, this is from Thomas Payne at Trader T Payne on Twitter. I really like Thomas's Twitter page. He always has really good information about the psychology of trading and good insights. So I really would recommend that you follow him on Twitter. But he says, a great stock with a perfect setup being traded in a successful system can still fail. That is why all trades should be treated equally in regards to risk. And it's so true. You know, I mean, each individual trade is basically a coin flip, right? Each day in the market, it's about a 50-50 whether something's going to go up or go down. And, you know, if we're doing our job correctly and we're looking at the technicals, then we should have an edge, right? We should have an edge. I mean, if there's a particular setup and you run it 100 times, you know, you should have an edge of, you know, swing trading, maybe 60%, you know, 60 times out of 100, 65 times out of 100. My winning percentage is about 70%, 70 times out of 100. But just because you have a long-term edge doesn't mean that any particular trade is going to go your way. So, you know, if you have a setup that has all sorts of good stuff behind it, that's good, right? You want to look for those, but don't add any extra significance to that trade, because essentially on any one trade, it's just a 50-50. So, you know, you don't want to go, well, I'll give it a little bit more room. I know I'm right, because if you see that you have all these great indicators lining up in your head, you start feeling, oh yeah, this one's going to go. And if you feel like this one's going to go and it doesn't go against you, or if it does go against you, then you might hold on longer than you should have because of that. So it's not correct. I mean, look for the trades with the setups for sure, but don't add any extra significance in holding on to those any longer than the others, because no matter how good the setup is, essentially at the end of the day, it's still a 50-50. So anyway, Thomas Payne at Trader T Payne on Twitter. A great stock with a perfect setup being traded in a successful system can still fail. That is why all trades should be treated equally in regards to risk. So I think that's good advice. Thank you, Thomas Payne. All right, I just wanted to share that with you. Well, let's get through this and see if we have anything today. Let's see where the market's at. 266. All right. Max says, for me, it's like great stock with great setup and perfect entry. Going 5 ATR, I can still lose money. That's exactly right. If you take that trade 100 times, Max, I think the edge is going to play out for you, for sure. But on any one particular one, it doesn't have to do anything, right? So don't get married to the stock. You know, if it goes against you, speed date and get out of there. So keep that in mind, please. Yep, keep that in mind. All right. So Apple is, you know, it's having a decent day here. Looks like at the current moment, we are above the 100-day moving average. Keep in mind, yesterday's bar, everyone, was really, oh, that's not going to work. Is really that big because we opened here. So that is one big old bar. Always watch for that. If you have a gap down, it doesn't make that bar look so big, but remember, it closed the previous day here. So it is literally this big. And, you know, I'm always concerned about buying in front of these big bars because there was a lot of supply coming into the market, right? So if you have a lot of supply coming into the market, I mean, geez, this was 3.5, 4 ATRs down, right? So yeah, we've rallied back here. Doesn't surprise me that we've rallied back here, but I'm a little suspicious. I'm a little suspicious of this. So, you know, if somebody wanted to buy Apple here over the 100 and just get out if you closed under the 100, that's fine. It's at a 41.94 RSI. You know, going from a 41 up to a 50 is probably going to be your move. So there's not a lot there unless you just want to trade this and just hold it as long as it's above the 100 and that's all you have to do. I mean, I would be totally fine with that, but I'm not going to buy anything on Apple today. So silver, you know, we had that big move up. We came back down into the value zone a little bit. It's been chopping around here. It is up today a little bit. I would really like the 5 EMA to come back and cross under the 20 EMA and then cross back over. That would be another good long-term approach to trading silver, or coming down here. Now we've made a lower high, coming down here, washing out this bar, then looking for a V1, V2 here, or maybe back down here to the 200. So, you know, those would be my 3 potential setups on this, but nothing today. You know, we did, here's an example we had back on the 10th of July when we entered using the 520 cross. That's why here I want the 5 to go under and then back over. And you can see what a great trade this was for us. It was like 14% trade. We scaled out, scaled out, scaled out. I ran out of shares here. So, you know, it's always important, everybody, to don't try to fit the chart just because you want to get into it. Wait for a real decent setup. I mean, our job as traders is to trade well. It's not to trade a lot, right? It's to take really good trades and let the subpar trades go. And so there's no trade here on silver right now. Excuse me. AMD, we're below the 3rd ATR channel. We're still below the 100-day moving average, so nothing on AMD here. Amazon. So we did bounce off of the 200-day moving average yesterday, which was positive. You know, I look at these moving averages as groups of buyers, and so when I look down here at the 200-day moving average, I look at that. This is like a whole group of buyers that are probably going to step in here. They didn't step in here at all, right? It's just a matter of when are they going to step in, and this is where they stepped in. Amazon, this line here is the 250-day moving average. We are currently above the 250-day moving average. And let me show you, this is a back-tested system. This is from etfreplay.com. I'm using this by permission. This is a back-testing site. So here is Amazon based upon the 250-day. If it's over the 250-day, you buy it and you hold it until it closes below the 250-day. And you can see it had pretty good returns using this approach. Not as good as buy and hold. Buy and hold was 24.32. Using the back-tested approach of the 250 was 14.08. The drawdown on the back test was 60. The drawdown on the buy and hold was 93.3. So, you know, I mean, this does back test well. It only has a 14.5% winning percentage, so it loses a ton more than it ever wins. But the average win is 49%. The average loss is 2.5%. So it's like 20 to 1, right? 20 to 1 on your winners compared to your losers. So this does backtest well. It's a quantified backtested approach. So if we close above the 250, the 250 is 1783.86. $1783.86. All right. So if we do close above here, the 1783.86, I will consider buying a position in Amazon. And then if it closes even a penny under, I'll get out. So it's a good risk to reward ratio on Amazon. So that's one potential for today. Boeing, nothing really there. Alibaba just has gotten creamed in the last week. I mean, just creamed. We went under the 38 ATR or the third RSI yesterday. Today we're back above it. You know, generally that's a legitimate signal. However, it's not lining up with anything else. You have the third ATR channel above you, which I don't like that at all. So this is one of those situations where all this was a close under, close back over. If it closed back into the channel, I would like that a little better, because then we would have some support from the channel underneath us. But this is acting as resistance as the channel over us. So I'm not going to do anything with Alibaba today. Caterpillar, we were under the 30 yesterday. You can see we did rally, but see how we rallied right to the third ATR channel and rejected the third ATR channel. So, you know, it's a 31.35 RSI. Somebody could step in here and buy this with a close under the 30. But I don't like that we rejected the third ATR, and I don't like that we're down on a day, a big day up. Okay. Excuse me, everybody. I'm sorry. I've just got some bronchitis. So here's DDM. This is the double leverage Dow. Do you see how yesterday we closed below the 250 and now we're back above the 250? So let me show you again. This is on ETF replay. So this is a back test of selling when it closes under the 250, buying and keeping it when it closes above the 250. And pretty good. Had 191.1% return. Buy and hold was 252.3, but the drawdown on this approach was only 36.9, where the drawdown of the buy and hold was 81.7. So it wins about 21.6% of the time. It has about an 8 to 1 win to loss ratio. So, you know, going into this, you wouldn't expect this to win a lot, but when it does win, it wins big. We took the same approach here. See, this was based off the 200, but we closed under the 200, then back over the 200, and then we scaled, and went sideways, scaled, and exited right here. So this would be a mechanical robot approach, no discretionary maintenance needed on this. So yesterday it closed below the 250. Today it closed above the 250. Now, this is a double leverage. So, you know, if you normally were going to buy $10,000 worth of a stock, you would buy 5,000 because this is double leverage. It's the same as buying 10. So this does look good for me today. I am going to buy this today as long as it closes under the 200, over the 250, excuse me. And then if we have a close below, I'll go ahead and just get out. But this will be a mechanical robot trade. The Dow, unfortunately, I bought this back here 2 days ago when we rejected the 50, rejected the third ATR channel, closed back above, and then got womped up on here yesterday. I had to close, or I had to get out. But I just showed you the DDM. That's the Dow. This is the regular Dow. But I like the setup on the DDM better than here. Walt Disney. You know, this does look pretty good, but we have earnings after the bell on Walt Disney. I'm pretty sure. I don't think we had them this morning. I guess it's possible we had them this morning, but I didn't look. But I mean, this is positive that we closed under the upward sloping 50, and then now looks like we're going to close above on high volume. But I'm pretty sure. Let me just take a look real quick. Yeah, it's after the bell, so there's nothing I can do with Disney. Etsy lost yesterday, lost the 250, lost the 200, lost the third ATR channel. It went from under 30 back over 30 today. That is a signal, but honestly, that's the only signal it has. It doesn't have any double bottoms. It doesn't have any bullish divergences. So I'm going to just let this one go. Ford Motor Company had a nice move today. It's a 4134 RSI. I guess the time to buy it was yesterday when it went under the 30 and back over the 30. It is back into the channel now, which is good. It's basically a 41 RSI. But the way I look at this is with the 41 RSI, my profit target's probably the 50, giving me about 9 points. And my stop would probably be more than 9 points to the downside. So I'm nothing on Ford today. Facebook, this pink line here was the 30 RSI yesterday. We went under the 30 and closed back over the 30. I didn't take this trade. It is up nicely today. It's back in the channel. Fighting with the 100-day moving average there. If we look at the full bar yesterday, this is how big the full bar was. See how today we got right about halfway of this full bar? That's concerning to me. Volume is light. Yesterday the volume was heavy on the way down. So I'm just going to let this one go. Hey, Mount Doji's here. Good to see you, buddy. Hope you're doing well. All right, so I'm going to let Facebook go. I mean, it's okay. It's, on the weekly, we're in the value zone, which is good on the daily. But at the very least here, if I were to get interested today on Facebook, it would have to be a close above the 100-day moving average. But I'm concerned about yesterday's big bar and that huge volume. I don't know if this is just a bit of a bounce after that, so I'm going to be pretty cautious going forward. 5 below is still below the 30 RSI, so nothing there. Gold is up today, interestingly enough. Let me see here. All right, so gold's up at the third ATR channels. It doesn't mean it can't go higher, but the risk reward is not good. I'd like to see the 5 cross back under the 20 and then cross back over again. Like back here, we took the same trade when the 5 was under the 20, cross back over, and you can see this was a robot trade. Nice, easy trade here. We scaled all the way out to here, but that's what I'd be looking for here, or just a pull back into value in a V1, V2. So nothing on gold. Google. I was looking at Google yesterday. If this would have closed back over the previous high of this range, I was going to buy it, but it closed under, and it closed under the 50 RSI. It did bounce there, which is nice. It's a 52 RSI. It's decent, but again, yesterday's big move down with the big volume concerns me. Goldman Sachs rejected the 50, rejected the third ATR channel, rejected the 100. Looks like it's closing back above. There's not a V1 or a V2. Let me just check real quick and see how Goldman Sachs back test based upon the 50 moving average. So this is basically Goldman Sachs if it closes under the 50 and then back over the 50. Pretty good, isn't it? 362.8 compared to 189.7. The drawdown was 53.9. So this beat both on the return and beat on the drawdown. So, you know, this is why I like having ETF replay. So Goldman Sachs 50-day simple moving average. Did it close under? Yes. Did it close over? Yes. So, you know, if I bought this here today, I would get out with it closed below the 50. So, yeah, this does look pretty good. So let me mark this one down. All right, so Goldman Sachs, that does back test well. So close under the 50, back over the 50. This will not be a robot trade, though. I will manage this. IBB, I'm waiting for a 530 cross on IBB. Nothing there yet. Intel, barely up today. So nothing on Intel. Russell, I did get out of Russell yesterday because it hit my emergency 5% for my entry stop on Russell. So, you know, this was a moving average crossover trade, but I did get stopped out yesterday. So nothing on Russell now. Johnson & Johnson is just kind of moving sidewards there. MACD is positive. That's good. Nothing there. Coca-Cola. So, you know, we moved up, we went down. We made a lower high, but now we washed out this low. We came back into the value zone. We moved sideways. See how yesterday we washed out the previous day's bar. Today, however, earlier in the day, it had triggered a V1. Here's day 1, day 2, day 3, day 2, washes out day 1. Earlier in the day, we were above day 1's close, which is a valid V1 signal. But now it has untriggered. So, you know, we were above the value zone. We moved back into the value zone. We kind of started to move sideways. We spiked down. We reversed. So if Coca-Cola closes above 52.34, I will go ahead and buy that with the valid V2 in the value zone. So let's mark that. Lockheed Martin. So, you know, we moved up, we moved down, we moved sidewards. This does look like a decent V2. The only thing is we have this lower high in place. This is lower than here, so technically we should wash out this before we take the entry. This did gap, but it did fill the gap intraday and go back up. I mean, you know, you could take this trade. It's 54.83 RSI. It is a nice V2. It's just that it came from a lower high and didn't wash out this previous low. So let's look at the weekly here. The second ATR channel. Volume's lower on the move up. All right, I'm just going to let that one go. MasterCard. Excuse me, everybody. MasterCard we have, so that's fine. Merck we have. Microsoft, yesterday we closed under the 50, back above. Let's take a look and see what how Microsoft tests that way. With the 50. Ooh, not as good as Goldman Sachs, only 64% return, 281 based upon the buy and hold. So the 50 is not a good back-tested approach for Microsoft. Max says, Lockheed Martin's previous low was on high volume. It just made higher low, in my humble opinion. Yeah, it did make a higher low. Yeah, you're right. I mean, the only thing is though is that this is a lower high. So if you have a high, you go down, you rally, you have a lower high, then the way I was taught to trade V1, V2s is you want to have to wash out this low before it becomes valid again. Murat says, drink some tea with mint and lemon. That sounds good right now. Okay, Netflix. Netflix, we are working on a double bottom. We don't have a double bottom with a bullish divergence. In order to have that, we'd have to have these deep bars. We'd have to paint some green bars and then come back down and have lower red bars. So nothing really here on Netflix today. Nike, we did buy Nike back here on the 2nd of August, and then we got shook out yesterday with the close below the 200. It is now back above the 200. It's a 36 RSI. I think I'm just going to let this one go. We have the third ATR channel right there above us. So I think I'm just going to let Nike go. I think there's some better ones. Philip Morris. It's hanging out there at the 200, but that's not enough. You know, okay, so here's PayPal, right? We did go under the 30 RSI yesterday. Today we are closing back above the 30 RSI. That's a valid signal, but that's about all the signal you have. If it would have happened with a bounce off the 200, you would have had some previous support before it, if you would have triggered a V1, something like that, I would like it a lot better. So I'm just going to pass on PayPal. But again, going from under the 30 back over the 30, you can buy that. But again, I like to see a combination of signals happen at the same time. So who knows? It may not even close above the 30. So I'm going to let that one go. The Qs, I almost bought the Qs yesterday, but as you can see, it closed under the 30 RSI. It closed at 29.80. I was going to buy it if it closed above, and obviously I wish I would have. It is back above now, so you know it's valid. It went from under 30 back over 30, but I just don't like yesterday's huge bar. I don't like the big volume. I don't like the third ATR channels above us. I don't like the 100s above us. So I'm going to let that one go. Snap moving its way into the value zone, so that might set up later. S&P, we bought that yesterday at the close and sold it here at the open, so I will be buying this again today. The Square is not participating today. SSO went under the third ATR channel, back over, but that's about all. I'm sorry, it went under the 30, closed back above the 30, but that's about all it has. So I'm just going to stay clear of that. Bonds, I mean, this is an unbelievable run that bonds have had. So I'm not going to do anything with bonds here. Tesla, nothing with Tesla. Twitter had a bounce today. I just don't see a lot of volume on this move up today. UNG, nothing there. This natural gas. United Health Group, nothing there. Oil down 2% today, so nothing on oil. The dollar, we had this nice move up. We're coming into the value zone, so we might look for a V1, V2. VIX is down pretty substantially today. It looks like it was up higher, reversed back. Nothing on VIX today. You know, we did buy the VIX back here on the 25th of July when we had this V2. Here's day 1. Day 2 washes out day 1. Day 3 closes above day 1's close. We also rejected the 30 RSI, close back above. We rejected the third ATR channel, close back above. And we also had a double bottom with the bullish divergence. Here's the low with the deep reading of the bars. We rally, we go lower low, we have less, meaning this move here had less momentum to the downside. And you can see this was a freaking great trade. We scaled out, I think, to here. It was here or here, I can't remember. But this was like a 14.5% trade for us. But, you know, compare and contrast what happened here with the V1 under the 30, over the 30, under the third ATR channel, over the third ATR channel. Nice V1, double bottom with the divergence. See, a lot of these went from under the 30 back over the 30, but that is all they have. This had a little bit more meat to it. And, you know, so that's why I took this position again after taking a previous position that lost. I didn't like to do it, but I mean, obviously I'm glad that I did. So nothing on VIX. Verizon, nothing there. Walmart. Well, we went under the 30, back over the 30. We do have that going for us. No V1s, no V2s. We did get rejected at the third ATR channel, so nothing on Walmart. XLE, 26 RSI, it's too low. Financials, it's back into the channel, but that's about it. Not a lot of volume. Real estate, no V1 yet, so nothing there. Utilities big day today. Did create a V1, but you see here's day one, here's day two. Day two washes out day one. Obviously we closed above. It looks like we're going to close above day one's close, but this bar is larger than one ATR channel, so that makes it so I can take the trade. I did take the trade back here because day one, day two takes out day one, day three closes above day one. You know, I like this trade. Just like I said in the psychology part, this was a good setup, but even though it was a good setup, we still got stopped out yesterday, right? So anyway, nothing on XLU. So, you know, this has a little bit more meat on the bones. We did go under the third ATR channel. We did go under the 200. Looks like we went under the 30 RSI and closing back above. So, you know, this one has a little bit more meat, and it's inside the channel. So, what is that? XLV. So, this one does look decent. All right, so let me see now what our potentials are, and we'll see if we can narrow these down. So Amazon, you know, that does back test well over the 250-day moving average. DDM does back test well over the 250-day moving average. Goldman Sachs does, that 50 moving average does. Tell you what, though, I'm going to have to let Goldman Sachs go. Even though it does backtest well over the 50, but the reason I'm going to let it go, everyone, is because I have MasterCard. And they're not exactly an identical correlation, but they still kind of have to do with finances. So I am going to let Goldman Sachs go. If I didn't have MasterCard, I would buy this because a close under the 50, back over the 50 does backtest well, but I don't want the correlation. Coca-Cola now does have the V1, has the valid V1. So if Coca-Cola does close above here, I will buy it. And then it's a 39 RSI. I'm just going to let that one go. So Amazon over the 250. Get out with the close under the 250. ProShares close above the 250. That's a good back-tested approach. Half position because this is double leverage. And then Coca-Cola right now does look valid. Hey, Brian, 512's here. How you doing, buddy? Brian says, damn, I almost missed today too. Well, I'm glad you're here, Brian. Good to see you. All right, so let me take a look here. So our MasterCard's doing really well. Nothing to do there. Our Merck is doing fine. S&P, we're going to buy that at the end of the day. All right, so we have to buy the S&P at the end of the day. I've already got that programmed in to buy that. So are we okay with Amazon over the 250? Yeah, I think so. You know, it's a good risk to reward ratio. If we just close under there tomorrow, then we're out. That's all there is to it. ProShares, mechanical trade, buy and hold over the 250. That one looks good. Coca-Cola, that one's gonna be close. So I'm gonna go ahead and put in my orders right now to buy DDM at the close. All right. All right. Again, this is a mechanical back-tested trade with the close under the 250, close back over. As long as it closes over the 250, I'll just keep it and phase out. Let it take me where it's going to take me. But if it closes under the 250, I'll just get out and hopefully for a small theoretical loss. Coca-Cola is right on the bubble there as far as whether that one's going to be valid or not. And Amazon, it's a little too close to call right now. Ooh, having a good day, I'll tell you that. Boy, am I glad. I'm glad to make up some of yesterday's loss. Woo! Yesterday was brutal, everybody. All right, so there's the Qs. Hey, Steve Burns here. Good to see you, Steve. Thanks for coming by, my friend. Steve says, my positions worked out pretty well yesterday. What a ride. I know, Steve, you had some pretty, you know, after the podcast yesterday, I went over to take a look what your positions were, and I was glad that we had some of the same positions. It always makes me feel better when I go and look what you bought, and I go, oh, good, I got that too. You know, I'm in good company. In case you guys don't know who Steve Burns is, Steve Burns is a famous author and trader and mentor, financial expert, and just all-around great guy. If you haven't subscribed to his channel on Twitter, @SJosephBurns. Steve's a friend of mine, a mentor and teacher of mine over the last couple years, and it's really great to have you here. So you had MasterCard too. I was really glad to see that you had MasterCard when I had MasterCard. So good company for sure. So that's worked out well for you. I know you also bought Amazon yesterday with the rejection off of the 200. So that worked out well. You're having a nice day today. So I'm one day behind you on the crossover the 250 and then let's see, what else did you have, Steve? You had, now I can't remember. MasterCard, Amazon. Sorry, I'm sick today, so. Oh, the S&P when it retook the 30 RSI. That's right. No, it didn't. It didn't take the It didn't retake the 30, did it? Oh, or maybe today you're talking about taking it. Oh, okay. And you bought the QQQ today. Okay, gotcha. Oh, and you bought Facebook also. You bought Facebook with that rejection of the third RSI. That's right. Okay. Trying to get my head on straight today. All right. So, Amazon's close to that 250, so we'll just have to watch it. DDM, I did already put the order in for DDM, and then Coca-Cola is now under. All right. Oh yeah, Steve bought IWC, Amazon, MasterCard, and Facebook. You sound better today. SPY was today. Okay. I think I sound better, but this morning was brutal, man. I had chills. I had the heater on, even though it's summer. I was walking around in a big coat, a big hat on. I'm just looking forward to the end of the close so I can go back to bed. But I'm glad I sound better. I think I have a little bronchitis and a flu. All right, so Steve bought the SPY back over the 30. Bought the Qs back over the 30. And then MasterCard we have. Oh, we got 3 minutes. I better get to work. All right, is Amazon going to hang in there for us? Looks like. All right, here comes Amazon.
Order filled.
Okay.
Order filled.
Okay. 1789.44. That was a horrible fill. All right. Pro shares, we're going to buy that. And then Coca-Cola. Ooh, that's going to be tough. So it doesn't look like Coca-Cola is going to trigger. We have 10 seconds, so it's untriggered the V1, so I won't be buying that.
Order partially filled. Order filled.
And Amazon did stay above the 250, so that's good. I bought the SPY at 287.80 for the overnight trade. All right, and
Order
then
canceled.
we bought DDM at 46.37, right there at the close. All right. So we did buy. All right. So these are our holdings at the moment. DDM with the mechanical approach with the close under back over the 250. I'll hold this as long as it holds the 250. Otherwise, I'll scale out to the upside. MasterCard, we hit the 3 profit targets. I am going to be looking tomorrow. If we reject that 50, I'll go ahead and just lock that in. Merck, we did hit the 1 profit target today, so we're nicely in the profit on that one. SPY, the overnight SPY, I did buy this at 287.80. And then Amazon, basing this off of the 250. Any close below the 250, I'll get out for a small loss. If it trends, if we're lucky enough to have it trend, then I will just scale out. So that's what we've got. We've got DDM, we've got MasterCard, we've got Merck, overnight SPY, and Amazon. So pretty good. Not too many positions, but we did have a really nice day today. Really great day. So, all right, listen, if you guys have any questions, don't be shy. Just go ahead and type them in the chat, and I'll do my best to answer them. Before I get to the answer part, I just want to put in my quick plug and let everyone know that I do offer private one-on-one coaching and teaching and mentoring lessons in the evening time via Skype. I've had really good success with my clients. I've turned losing traders into winning traders. They can hardly believe it. They can hardly believe that they're actually making money now compared to what they did for years. I really enjoy teaching. I enjoy teaching this live stream, but the one-on-one lessons are better. One, because they're one-on-one, and two, because I teach you and then I have you teach it back to me. That way I really know that you know it. I throw curveballs at you. I try to mess you up. And then, but if you can hit my curveballs and give me the right answers, then I really know that you know it now. So, if you've been thinking about taking a lesson with me, my hourly rates and my contact information's in the description of this video. And then also, if you could hit the thumbs up button, I would really appreciate it. It helps to promote the channel and to grow the channel. And there's a lot of people out there that really need help with trading. I mean, tons of people, and I want to help as many people as I can. So, if you could share this channel on social media or tell your trading friends about it, or at the very least, hit the thumbs up button, I would really appreciate it. All right. Hey, Frederick's here. Good to see you, Frederick from France. How you doing, my friend? Thank you for coming by. All right. Does anyone have any questions for me today at all? On anything we did, or if you'd like me to look at any particular stock, or if you have, any issues in your own trading that, maybe you'd like to tell me, and maybe we could talk about it and see if we could get something resolved. So where did we end up? We ended up 311 points. Keep in mind, everybody, 311 points up is just under halfway of what we were down yesterday. So that's not too surprising to me. Going forward, it'll be interesting, though, because we had a huge day down yesterday. We had huge volume down. So I'm a little suspicious of this rally. Doesn't mean I'm not going to take my signals when they come, but I am a little bit suspicious. Frederick says, I am good. Do you take a trade with an RSI like 36 or 58, not close to 30 or 50? So generally, Frederick, if I'm above 30 and I'm targeting the 50, so 40 is about my line in the sand, because if I take a 42 and I'm targeting 50 RSI, I've only got 8 points to the upside. If I have 42 down to 30, then that's 12 points to the downside. So it's not giving me as good a risk to reward ratio. Like kind of the maximum I'll take when I'm shooting for 50 is 40. Obviously, I'd rather have it at 30 and shoot for 50, right? So, but if it's like 34, 35, 36, that's fine because I'm still targeting 50. But if it gets over 40, then I have less to the upside theoretically than I do to the downside. And then, you know, if I buy at the 50, I'm targeting the 70. That's good. That gives me 20 points. But same with buying at the 40 to go to the 50. The 60 is about as high as I'll go because then I have 60 to 70 or I have 60 back to 50. So I hope that makes sense. 27 RSI, no, I generally wouldn't buy that because it's under the 30 because 27 is probably only going to get back to 30. So I hope that makes sense. Do you take a trade with the RSI like 36 or 58? Yeah. 36 targeting the 50, yes. 58 targeting the 70, yes. Murat says bar colors. All right. So this is the impulse system designed by Dr. Alexander Elder. I studied one-on-one with Dr. Alexander Elder. He uses this in his trading a lot. So when you have red bars, what that means, there's two variables with the red bars. If you have a red bar, it means that the current MACD bar is lower than the previous MACD bar. Okay, you can see this is getting larger, 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 larger. Do you see now today that this bar, MACD bar, is not deeper than the previous MACD bar? That is why it paints it blue. Okay, and he bases it upon two things: what's going on with the MACD bars and also the slope of the 13 EMA moving average. So see the green bar we have? That means that the MACD bar, even though it was down less than the previous bar, and the slope of the 13 EMA was also up. That's when you have green bars. Blue bars is when you have here the MACD is higher than the previous, but the blue bars is when either the MACD is lower than the previous bar, or even if it's higher, if the slope of the 13 EMA is down. So I know it's kind of hard to understand, but what he's looking for the momentum either going up or going down, or the slope of the 13 EMA being down. So kind of make this easier, he is allowed to buy when the bars are at least blue, because that means either the MACD bars are not as deep as the previous MACD bar, or the slope of the 13 EMA is positive. So the best ones are when both of them are, you have the MACD bar is not as deep as the previous bar and the slope is also up. So it's not a trading approach. It's basically a censoring approach. So if he wants to go long the way Dr. Elder trades, he can only go long if the bars are green or blue. That's fine. He can't go long when the bars are red. If he wants to short, he can short when the bars are red or the bars are blue, but he cannot short when the bars are green. So that's just his approach. And I mean, I do use this somewhat, but some of my deep dip buys, the bars are obviously going to be red. But for me, that's okay because it's a different system. I know that was a mouthful, Murat, and it takes a bit, but I like having the impulse here because if the bars are green, I know both the MACD is going higher and the slope is higher. If the bars are blue, then either the MACD is going higher or the slope is negative. So, but just to kind of sum it all up, if the bars are blue, it's okay to buy. If you're long, if the bars are green, it's okay to buy. If they're blue, it's okay to buy. But if they're red, that for his approach, he's not allowed to buy because that means both the MACD is getting stronger to the downside and the slope of the 13 EMA is down. Murat says Disney missed. Let's take a look. Yes, they did. They're down about 3.5%. Frederick says, okay, I see. If price closes above 200 MA, but at a 27 RSI with the V1 or V2, do you take this setup to enter the trade or no? RSI is more powerful than V1 or V2 or 200 SMA. It's a good question, Frederick, and it just really depends. I mean, I have taken trades where I have a V1 and a V2. It closes back over the 200-day moving average, but it was still under the 30 RSI. I have taken those. It basically comes down to, if I'm going to take something under the 30 RSI, I need 2 or 3 other things to make it valid. Because if it closes under the 200, then back over the 200, it has a V1, all this good stuff, but it's still at a 29, yeah, I would still take it in some cases because the risk is defined below me, the 200-day. So, I don't want to always say you can never buy under the 30 RSI. It's just the general rule that it's not good to. But there are situations where you do have, other indicators that come together at the same time that may make you have an exception to that. Are you looking at any particular stock, Frederick, in regards to this? I'll give you an example, Frederick. This is from Steve Burns. Okay, Frederick, let me show you. Do you see, let me take a look here. Do you see this trade, Frederick, right here on this day? Do you see how we bounced off of the 200-day moving average and then closed back above? Do you see how at this level we're right in line with this previous low that held support? So these are two strong things. But look at the RSI. It's a 2786. So this is exactly what you just asked me. It's under the 30, but it bounced off of the 200-day and it also rejected the previous low back here. Is it okay to buy? So in this particular case, I know Steve took this trade even though it was under a 30 RSI because it rejected the 200-day. It also caught support at that previous low, and you can see it gave him a good risk to reward ratio. If he was wrong, he was small. It was wrong small, but you can see that was a great trade that he had. Does that make sense, Frederick? Frederick says, okay, I see, because I did not enter a few trades on the French market because lower than 30. Yeah. As a general rule, it's probably not a good idea, but if you have support of a previous low, if you have a V1, if you have a rejection of a major moving average, then, occasionally if it gives you a good risk to reward setup like this one here on Facebook did. Does that make sense, Frederick, on what I just showed you on Facebook, Steve's trade? But you see the day that he bought it, it was 27.86. But he overrode that rule because it also caught support back here at this previous low. Merritt says, whenever a stock forms a well-known chart formation close to earnings, it always does the opposite of expectations. I had triangle formation. That was Disney. Yeah. Yeah, earnings are tough regardless. You know, if a stock is moving up strong into earnings, you know, I have noticed a lot of the times that even if the earnings are good, that the stock goes down. But yeah, it's, you know, I mean, this was a V1. This was a V1 on Disney, right? Day 1, day 2, day 3, day 2 washes out day 1, and it did close above day 1. But again, you know, glad that I didn't gamble on earnings because it's down 3% now after hours. Whew, boy, I hope I feel better tomorrow. All right, let's see. Does anybody have any other questions for me? So I hope everyone's staying safe out there and position sizing rationally and conservatively. Frederick says, okay, understood, Greg. Facebook help better to buy close to the 200 SMA, not too far away to avoid big loss if price closes. Yeah. But again, if it closes over 30 RSI, that's even better. But this was just an example where Steve overrode that rule because he had two other indicators. All right, everybody. Well, listen, last chance for questions. Otherwise, I'm going to head back to bed and hopefully be back to myself, my regular self, by tomorrow. All right. Well, Frederick, thank you so much for coming today. I appreciate it. Merritt, nice to see you from Norway. So Frederick's from France, Merritt's from Norway. That's so great. We have some European followers. Steve Burns, thank you, my friend. It's always an honor. Thank you for coming by. Really appreciate it. Brian, good to see you, buddy. Thanks for coming by. I hope you're learning something. If you have any questions, just email me. Really glad to see at such a young age you're taking an interest in this. Max B, thank you for coming by. It's good to see you. Mount Doji, good to see you, bud, as always. Johnny, good to see you, my friend. Hope you're doing well up there in New York, I think it is. And John, thank you for coming by. I appreciate that. And Brian says, hope you get better. Thanks, bud. I appreciate it. I hope I do too. So, oh, Frederick says, well, I forgot to check previous low. How far you look for bottom 1 month? Yeah, you know, 1 month is a pretty good number if it's at least within 30 days. And you know, I learned that from Dr. Alexander Elder and Kerry Lavorne. You know, when you're looking for a double bottom with the divergence, the best ones happen when they're within 30 days of each other. If you go out longer than 30 days, then it kind of loses some of its effect. So, yeah, good point. Thank you for pointing that out. So about 1 month, within the 1 month rear view mirror is probably the best. All right, everybody. Well, thanks for coming. I appreciate you spending your time with me, and hopefully we will see you tomorrow during the last hour of the market. And I hope everybody had a good trading day today. So, all right. Take care, everybody. Hope to see you tomorrow. Bye-bye.
U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.